Hello traders, my name is Logan with Funding Talent, and in this video we're going to be doing our market forecast for the last week of July 2021. In this video, what we hope to do is highlight the best fundamental drivers for you to be aware of in this upcoming week and maybe stay away from if you're a shorter term trader, or the technical setups that we are currently keeping our eye on in order to capitalize on in this upcoming week. So without any further delay, let's get right into the video. Hello traders, so here we are on our slideshow, and as we always do, let's dive right into the fundamental drivers, the high impact news of this upcoming week. So for this week, this is the week prior to NFP, so it's not yet NFP as this is the end of the month. But what we're looking at is some news on Tuesday, starting at 10 a.m. for the USD and then 9:30 p.m. for the Australian dollar. Wednesday, just some Canadian dollar news at 8:30, some USD news for our FOMC statement at 2 p.m., and then the press conference as well at 2:30 p.m. Then on Thursday, some more USD news at 8:30 again, and 8:30 a.m. again, Canadian dollar and USD news on Friday. So remember, all of these times are in EST, Eastern Standard Time. So be sure to watch out for these times. Really, the only day that I would worry about is our FOMC statements on Wednesday. So the U.S. manufacturing PMI hit another record high in this month, reaching 63.1, easily beating the market forecast, which were 62. New order growth accelerated as new and existing customers ramped up their spending, and firms also saw a stronger pickup in foreign client demand, which is pretty interesting. Production rose at a slightly quicker pace despite further reports of material shortages, and on the other hand, service PMI dropped below market expectations. So manufacturing PMI was higher, but service PMI was lower. In other news, we spoke about this last week, which I thought was very, very interesting when we were talking about the Delta COVID variant. The city, which I will not pronounce because I do not want to offend anyone, has declared a partial lockdown. So will we continue to see this in other parts of the world? I'm really interested to see how this pans out and what its impact is going to be on the global economy. We all know what happened last time we had a lockdown. I can't imagine going into a second. So, other than that, a lot of really interesting news this week. The Biden administration warned in its last week businesses operating in Hong Kong that they are subject to restrictive national security laws, which means they are at risk of an electronic and physical surveillance without warrants from their government and of having to surrender corporate and customer data to the Chinese government. So when the Biden administration said this, China then publicly said that they are going to retaliate, and what they did today was announce retaliatory sanctions, specifically against 6 American individuals and 1 entity. So are things starting to heat up between the U.S. and China? I definitely think so. I think there's a lot of things that are really interesting going on with China right now and what's going on in the South China Sea and what its impact is going to be not on just in the economy, but also on relations around the world. So it's really important to pay attention to what's going on over there, as this is potentially the next largest conflict that we have. It's not for sure anything's happening yet, but it does seem like tensions are starting to rise. So despite this news, we are still going to keep on with our risk on market sentiment, which means expectations are higher for further economic growth. The reasoning for this is besides tensions maybe raising, still there's a lot of good news coming out, and nothing has really changed our mind on that. For our currency traders, this means that we can expect the New Zealand dollar, Canadian dollar, Australian dollar, euro, and pound to appreciate if this risk on market sentiment continues into this upcoming week. And for our indices traders worldwide, that means we can expect indices globally to appreciate as well. So let's go right into our technical analysis for this week and check out our charts of the week. So to start off this week, we are still looking at gold. So essentially what happened was we had this retracement, which we spoke about last week, and then I said prices can be seen to appreciate. They were appreciating, but now we're starting to get a little bit of a retracement, which I'm really not worried about. This is actually pretty good. This could be our second wave out of our 5-wave advance. For our newer watchers, I really like to use Elliott wave principle in my higher time frame analysis, which is essentially only what we're sending to you guys. And essentially what that means is we can expect the market to move in 5 distinct waves, followed by a distinct 3-wave pattern. I'm not going to go too deep into it because we talk about this a lot on our past episodes, but essentially a 5-wave motive move, which is impulsive and is our strongest move, which takes us to our new highs, and that is followed by a 3-wave counter move, which is called the ABC. So this is the 5-wave advance, and this is the ABC correction. Again, if you want to learn more about this, please go watch our later videos, which we did, our market forecasts, and I'm sure at one point we might make an educational video if we get enough questions about Elliott wave principle. But besides that, right now, essentially corrections are healthy parts of sustained trends, and what we're looking at now is a 2nd-wave correction, which is to be expected in our 5-wave move higher. So that's what I'm expecting for gold, and my bias will remain long. XAGUSD, which is silver. I said last week once we break out of this consolidation would be our entry short. We did get our entry short, and what we're looking at is a move at least back down to this prior low, which we made at 21.71. So my bias is going to be bearish on silver. Looking at US30, we called a short trade out last week, which worked out phenomenally well. The price moved very, very quickly down, and you would have definitely taken profits at least some point in this move down, but then followed immediately by a move back to its original highs. So this will be our fourth time retesting this zone. Let's go to the daily chart. As you can see here, we're still looking for our third retest to this divergence line on the RSI. The third test for me is a really strong confluence for a reversal. So if we get that and then a move lower, I'm going to look to take another short position. But what I'm looking at now is because we came back up so quickly, it's definitely possible that we break out above this zone, come back lower, confirm this as resistance, now turned support because we broke above it, and we confirmed it as support now, if that happens, and then another move higher. So essentially, if we get this retest and a push lower, I'm expecting prices to move lower following that divergence, or prices to break out, retest, and then move higher. This is actually just a recap on NZDCAD of last week. We called for a move lower from this resistance fractal, which you guys might say, hey, Logan, we didn't move higher. We actually broke higher. But if you look in the daily chart, you will see that we exactly retested that zone perfectly and then moved lower. So we did move lower. That trade worked out very, very well. You could have taken a short position on this candle or even on this doji if you want to be really aggressive, or on this candle, honestly. And then price move lower, at least hitting our take profit, because our take profit would have been around here at this next support fractal, as you can see, was resistance, then turned support, and our take profit would have been hit. Now, I do not really have any opinions on NZDCAD. I want to see more price developments before I make a better decision, but this is just a recap of last week's trades. I hope you guys caught it, and let's move into the next. So, USDJPY, again, a recap from last week's trades. We called for a retest of this channel, and then a push lower. We got that. Around last week, we broke out of this support line, bounced back up higher, had another entry right here on this candle, and then price move lower, hitting our take profit, at least at this level right here, the support fractal right here. Just to draw it back in for you guys. Price would have wicked back down there and then moved higher. Since same thing as NZDCAD, I really don't have any opinions right now, but I do want to see price developments before making another call. Just a recap of last week's trades. Hope you guys caught that one as well. Now, for another recap of last week's trades, would be GBPUSD. So last week we said that we could expect to bounce higher before moving lower, but I also mentioned that if we break lower, we will expect prices to reach this support fractal, which we did, and we actually moved lower. So this trade would have worked out fantastic, would have worked out quicker than anticipated, but still worked out very well. Right now, again, no real personal opinions on this. I need to see further price development before I make an opinion, but another fantastic trade from last week. Here is the dollar index, the DXY, and what I'm looking at right now is, as you can see, we have some divergence on the top here, and we're moving in this ending diagonal type of movement up here, also referred to as a wedge, whatever you want to call it. But as you can see, we are reaching our resistance fractals. Let's see what we can see on the daily chart. Our resistance fractal will start right here. And once we reach this level, or even prior, I'm going to expect a break lower, and then price to move lower, possibly to the top of this minimum, which will be your first take profit, and then your second take profit could be the bottom of the support fractal. But my bias is going to be medium-term bearish on DXY. And a very similar chart on EURUSD, except long, which is positive correlation, and confluence for this trade. So what we're looking at now is a long off of this divergence, which we've been seeing here. Actually, we could probably draw it from here. Yep, look at that. Looks great. So for people that don't know, divergence is a disagreement between price and a indicator, which is what we have here, right? This is the RSI. Price is moving higher on the RSI, yet price is moving lower on the price chart. So what we're looking for is a breakout of this resistance line and then a move higher. What would be preferable and would be a very aggressive but higher risk reward entry would be a bounce off of here, strong candlestick pattern, and then a break above. For this trade, stop loss can go directly below the support fractal because at that point the trade will be invalidated. But as you can see, we finished a 5-wave decline and now we're looking for our corrective waves to play out. So for take profits, what we could do is we could look for the $1.19 level. as our first take profit. And that's where I would actually look to take profits in general. So my bias is going to be long on EURUSD. And Euro Swiss franc, just a quick call out here, is I can see a potential head and shoulders. This is only valid if we break and close above the neckline, which is this resistance line right here. So if we do that, that'll be a long opportunity. And for our last chart of the week will be USDCAD. As you can see, we've been moving very, very nicely in this 5-wave motive move higher. And now we came back down for our 4th wave retracement. If we break this low of this reversal zone at $1.24, about $1.25, then the wave count is invalidated, the trade is invalidated. But what that also tells us is if we want to take an entry around any level, really, that we know a set stop loss is right there, right at that level. Because one of the main rules of Elliott wave theory is that the 4th wave cannot retrace farther than the 1st wave's extreme. So this is the 1st wave's extreme. As you can see, it lines up with that reversal zone. And our reversal zone started right here because this is the 38.2 retracement of this 3rd wave. This is pretty close to the 61.8, but also measured just due to the 1st wave extreme right here. So what I'm going to look for is a development of price, maybe some chop around here, consolidation, form a price pattern, and then continue to move higher. My bias is going to be long on USDCAD. So traders, that was our market forecast again for the last week of July. So if you liked this video, we really hope that you pulled some insight and value out of it. And we ask that you follow us on all of our social media platforms because we're releasing new content which will be hopefully helpful to all of you guys every single day across all of our various platforms. And we're releasing videos just like this on our YouTube channel, so be sure to watch out for those. As always, on behalf of everyone at Funding Talent, happy trading.